traders, Raghi here, and in an ongoing effort to give you guys this game plan that we have been using since January, since June 11th, in order to understand how it is we're trading this asset bubble, which might be a temporary state of affairs, it might be a prolonged state of affairs. Nobody knows. Hence, that's why they're bubbles. We don't know when they're going to burst. But for right now, we know market looks like it wants to head lower, it somehow magically finds support and heads higher. So it makes sense for us to focus on the long side of the market. Now, this is just an approach that I'm using. It's worked exceedingly well, except for the one day Thursday that we had that significant sell-off. Other than that, and even that, by the way, if you focus on the long side of the market on the daily time frame, worked fantastically well. So you'll see whether it's a 1 minute, whether it's a daily time frame, we are focusing on what levels of exhaustion can we buy at, specifically in terms of day trades today. And by the way, will we get back to the daily? If we end up, and I think we might, with a significant sell-off as we wind down the month of June and the quarter, if we end up with another, and the Thursday that I'm referring to, so on the 10th, we went to a long-only bias. On the 11th, we had that significant sell-off. If we end up with another June 11th-esque type sell-off, and it lands us near the 21 exponential, it lands us inside, which would be great, the 34 EMA wave like we did on that last sell-off, we will look for long positions once again. I don't think that some redemptions and some reverse repo shenanigans from banks who are posturing to make their balance sheets look better than they perhaps are, I don't think that undoes the asset bubble that we're in. It will simply present another opportunity. All right, so with that being said, if that happens, we'll shift gears as we did in the wake of that Thursday sell-off. We'll shift gears to the daily, but for now, I've got my sights set on the 1 minute time frames. That is the time frame from which I day trade. Now, the idea is focusing on the long side, but not without discretion. Meaning, today the NASDAQ naturally gave us a clearing range breach to the upside. Now, what does that mean? Clearing range breach. The clearing range is the first 30 minutes of the day from 9:30 to 10. That is the clearing range. Sometimes you may have heard it be referred to as the opening range. It's when the trades that were overnight, conditional orders, limit stops, are all just being executed. In other words, cleared off the books, filled, right? And you'll see an interesting range oftentimes develop during that 30 minutes. So that 30-minute high, the clearing range high, as you can see, was taken out to the upside right here. And then the tool that we use, whether that you're using the FMB or the Waikiki on the TOS or the SBRH clearing range for TradeStation, all three of which actually are available in the Room Drive for Simpler Futures members. Whatever version you're using, you'll notice that we breached to the upside. Terrific. That gives us an aggressive, a moderate, and a conservative level. Another way you can look at it is high, medium, and low. This refers to risk, not probability. Risk. High risk, medium risk, low risk. What is risk in relation to? Our stop loss, otherwise known as our point of validity. What's the point of validity for a clearing range breach to the upside or a buy? If we were to break the clearing range low, how can a breach of the clearing range high still be valid? And you're right, it cannot be. So if we have a clearing range breach to the upside, the antithesis, the point of validity for that is the opposite side of the range. And you'll hear me use that word. It's a terminology I coined, about a decade ago to really get me. I'm an English major. Words matter, right? Meaning matters. Stop loss, negotiable. Percentages, movable. Dollar amounts, again, movable. Point of validity, if I am arguing with validity, that resonates a completely different series of synapses firing in my brain. You are no longer trading a setup that is valid, Raghi. That's the communication to my sometimes stubborn brain. We all have this. Change the terminology, change the meaning, you will change your behavior. So today, what we decided to do is think about that high risk or that aggro level. Oftentimes what I encourage traders to do is think about NASDAQ futures options or the QQQ ETF options. It would simply be long calls. That's what I did. One thing to remember when you're doing this, specific to using options, is if you're buying calls in an up market, which I really generally feel, unless you're lucky enough to be trading a market taking off like a rocket ship, in which case overpaying for options calls is something you can get away with, largely I'm going to expect some bearish Momo, a retracement to a support level in order to take advantage of what I believe is a momentary mispricing of the option. All right. I feel like I know something the person writing the option doesn't. The person writing me the option today took advantage of maybe selling higher price puts to folks taking advantage of that bearish momentum, but they also know there's very little demand for calls in even momentarily bearish markets. I scoop up that call on the cheap. That is my blue light special. I'm dating myself here, right? That is my Kmart blue light special opportunity. And that is a retest. It's aggro. A retest of what, you might ask? We've come back to the level of the breach. That's all we've done. We've rallied through that level, and then we've returned to it. That is a retest of this previous breach right in here. Okay, so we end up with our calls. Now, that's not all we did. We also looked at the XLC. We also looked at the XLY. These were two markets that were strong, right? Now, I want to remind everybody of something. My day trading window is basically the open to about 11:30 noon. That's it. That's it. It's just about 2.5 hours. I'm not looking to necessarily set up the second half of the day unless I have an initial balance breach or unless I'm willing to trade the second half of the day, which for me, to me, might as well be a completely separate day. To me, there are 14 days in the, 10 days, really 11 days in the week. Sunday evening, Monday morning, Monday afternoon, Tuesday morning, Tuesday afternoon, Wednesday morning. You get my point, right? There are 11 individual days as far as I'm concerned in the market every week. And I treat it as such, okay? 2 days really in this single day of the Tuesday trading session. Now, for a lot of traders, they love this. They love the fact that they can trade the morning, maybe leave a trailing stop and go call it a day. That's what I want for you all. I actually do not want you guys tethered to your desk all day long. I did it. I did that for about 7 to 10 years and I was pretty miserable. I like the idea that what I'm teaching you all can be executed in the morning and you can call it a day by noon if you want to. If you don't, well, of course, initial balance breaches and the volume weighted average price and other tactics can help you manage the remainder of the day. And certainly as long as this market doesn't stop you out at a trailing stop, let's see how high is high. Today was a terrific day for that. Do we know that on the onset of the day? Of course not. I think a lot of folks figured today was going to be a bearish day. Wrong. We're in an asset bubble, gang. There are going to be days, again, there will be a couple days here and there that feel and look like June 11th did, but they're by and large in an asset bubble going to be buying opportunities on daily time frames like we did the following Monday. All right, so XLC, XLY, along with the NASDAQ became buying opportunities for us. All right, now this is where it gets a little bit more interesting. The Dow, the Russell, and the S&P breached to the downside. Again, with a long-only bias, I say thanks but no thanks, and then what do? We start looking at the V-score extreme lows, whether that be the lows we've seen since 7 a.m. or whether that be the lows that we've seen between 9:30 and 10 o'clock. Either way, the -2 V-score on the S&P, and I single out the S&P. You probably could have bought -2 V-scores on the Dow and Russell as well. But if I know the NASDAQ is leading the charge, why not, instead of buying everything, why not say what's related to this outperforming market? The NASDAQ heavily weighted stocks and heavily weighted sectors. That's where Apple, XLY, XLC, and those names came into play. We also know that the S&P tends to track with the NAS. So notice I didn't wander into Dow and Russell this morning. I focused on NASDAQ, heavily weighted sectors, heavily weighted stocks, and the S&P, which is the dog to the NASDAQ's dog walker. Even though, and this is huge, gang, even though we had a clearing range breach to the downside, I will tell you the probabilities over the last 2 months typically have been against those traders playing breach retreats. Now this one wasn't as bad. Here's your breach, here's your retreat, and there's your retest of the clearing and of the lows. All right, you could argue this worked. But you know what worked better? Here's your V-score low. Here's your retest of your V-score low. Buy calls, buy the S&P, and take advantage of the upside movement, because in asset bubbles, you're typically going to see that kind of movement. That's it. And when we break the VWAP, get out. That's one easy way to put in a trailing stop. Okay? So this is exactly what I'm going to do tomorrow again. I'm going to write up the notes. You guys can check the notes out in the alert section of the chat room. You should also have it as an alert on your Simpler Trading mobile app. And this is exactly how I'm going to trade tomorrow. Bullish bias, knowing that one day we'll end up with a day like we had, like I said, on June the 11th, but that June the 11th is going to set up, once again, hopefully, knock on wood, some setups for us on the daily time frame. What have I been doing every day? Gang, I have been pretty much focusing on a handful of currencies here and there. For the most part, I'm just day trading the indices, day trading a handful of sectors, and just moving on with my day. Okay? So this is what I'm imparting onto you guys. This is a great day traders market. This is a great longer term daily time frame buyers market. A lot of commodities are acting kind of screwy. Just put your best foot forward and focus on those markets that seem to be moving with the asset bubble. So we'll take a look at some currencies probably tomorrow. My Forex Mastery folks, who I know a lot of you are in both the Forex Mastery and the Simpler Futures as well. I'll have a couple charts for you all as well. Hey, the Aussie is going to continue to outperform. The yen's going to continue to likely be weak, and will continue to persist in these risk-on names. All right, gang. I'll see you in the next update.